how to protect yourself, protect and profit, in fact, from a declining market. Patrick is the chief derivatives market strategist for Big Picture Trading. He joins me on the line right now. Patrick, I appreciate you agreeing to do this, given you are going to be busy immediately after the show. And I should have said this. If you want to participate in the webinar, simply go to moneytalks.net. There you can click on, and you better do it because, of course, by the nature of the technology, there's a limited number of people who can take advantage of this. But, Patrick, what a great time to be doing this because, look at the size of the volatility that we've been dealing with really since 2018. I think it's not difficult to argue that's been a feature for quite a while, but now we're getting the up and down volatility that's been so prominent since the end of January.
Absolutely, Michael, and thank you for having me on the show. And yeah, it's a lot of volatility in the markets, and it has a lot of people asking whether or not this is like this big crash. Is this the big event where the bear market is beginning? And one of the things that we feel pretty strongly about is the fact that the equity bull market that we've seen for many, many years now is likely over. But it doesn't mean that the nasty bear market has just begun yet. A lot of our models continue to support that this entire volatile event that we're experiencing here is still a market correction, and we compare it a lot to the Bear Stearns moment of in the summer of 2007. And I'll get back to that a little bit later in terms of why I feel that. But in the end, after that market correction happened in 2007, the market still rallied to an all-time new high before the more ominous 2008 bear market kicked in. And I still think that this market correction here is likely to find its bottoms here in the next couple of weeks.
Now, let me just ask you, when you get this kind of a down market action like we got Friday again, of course, are there some sectors that sort of perform better than others? Or how do you determine which ones, I guess, in anticipation?
Well, at this stage, this is sort of a liquidity-driven sell cycle, and so in this scenario, the selling is driven by a lot of those high beta names that were obviously best performers. But right now, there's just a void of buyers, and so everything is under pressure during these types of distribution cycles. That's why market breadth and other types of indicators are all, zeroing out right across the board, just because right now it's almost like a buyer strike that's going on in the market.
Well, at the risk for myself of being too simplistic, it becomes a bit apparent. The market was driven so much by anticipation of the Trump tax cuts coming, the regulatory decline, then it gets passed into law, those things are in place. So the news is out there on that side of the, of the coin, and other things. Now you got central bank tightening, et cetera, and you've got, these big gains in the market. To me, that is a recipe for some profit taking, or at least we're giving it a lot of excuse to take profits, and that's obviously what's producing some of the down days.
Absolutely, and from our models, we really like to study cycles, and so whether you want to look at it from a monetary cycle perspective, whether you want to look at it from a credit cycle perspective, or whether you want to look at it from a business or economic cycle, we are at the very late stages of all of these cycles. Right now, from a business cycle, this is as of next month will be the second longest business cycle in the post-World War II period, and I always say that while the length of a business cycle doesn't guarantee its end, the one thing we do know is we are in the liquidity drain phase of the cycle, which is where we experience peak growth and peak inflation, and central banks are given the reason to want to stay ahead of the curve and raise interest rates to try to tighten credit conditions and stay ahead of the curve of inflation running away on them. But inevitably, what ends up happening is they raise interest rates too far, tighten conditions too much, and ultimately often become the catalyst for triggering a recession. You can go back and look at the last 10 of the last 11 recessions were all in a period where there was monetary tightening underway, and so we're in a situation where the central banks are taking away that punch bowl.
Yeah. Now, as I said, you're doing the webinar rather immediately after Money Talks. By the way, perfect timing. What a miserable day we have in Calgary here, -12. We got -9 in Edmonton. Vancouver, it's raining. It looks like Noah's building an ark over the weekend. So why not come and learn how to make a little money and protect yourself with webinar with Patrick Ceresna coming up. Patrick, tell me about that. I think the people go, I get the scenario or I get the context, and I want to know what to do about it, how I can protect myself. So I'm going to take a break. I'll give you a chance to think about that because people need specific instructions. We'll do that. I know you're going to do that partly on the webinar for sure. I'll do that with Patrick Ceresna. Looking forward to that. There's so much to talk about. Patrick does this, every day. He's Chief Derivative Market Strategist for Big Picture Trading. More on the Money Talks Network.
In front of the Waverly,
music from Hair, that's right, 50 years ago this week. Here's an interesting stat, though. About 2009 in June, they re-released the Cast album. 2009, re-released it. That's 41 years later, 41 years later. 41 years later, it debuted as the highest debuting Cast album in the top 200 history. I mean, this thing has some staying power, the music Hair. Joining me on the line right now, I've got Patrick Ceresna, who is the Chief Derivative Strategist for Big Picture Trading, Chief Derivative Market Strategist. Patrick, before the break, we sort of set the scenario, the kind of environment that we're operating in. Let me just throw a couple of things that I know you talk about, but maybe you can help explain. Let's say I want to protect my overall portfolio. Is it as simple as saying maybe I could just buy a put, which gives me sort of like an insurance policy? If the market goes down, I could just maybe buy it on the Toronto Stock Exchange Index or the Dow Jones Index?
Well, absolutely you can. It's really a bit of a timing element, though, because during a period when we're seeing markets declining this much, we're seeing the implied volatilities of the market spiking, making the cost of insuring your portfolio considerably more expensive at this moment. So if you in a panic, come in Monday morning buying puts, you're paying substantial vol premium and essentially almost like buying hurricane insurance in the middle of a hurricane. But that doesn't mean that there aren't valuable ways to approach it. The key thing, I continue to believe that this is going to be a short-term market correction that will probably fully run its course out over the next couple of weeks, and we'll probably be rallying into the summer. If we see a period where the markets calm down and we see substantial retracements in the summer, that's a period where that lower vol condition would be a phenomenal time to be buying insurance for the second half of the year.
The other thing, you're going to be dealing with this in the webinar that happens immediately post-show, but the other thing you're going to be talking about is what about people who've already owned stocks? So you're going to be talking about specific strategies, but one of the straightforward ones, if you could write call options on those stocks that, have call options, to take in a little premium, give someone the right to buy your stock from you, but you take that premium in. It's been a great way, and I know you've instructed so many people, as a great way to sort of boost up your yield. Is that another appropriate strategy for the conditions you're seeing?
Well, actually, for the next 3 to 6 months, I think that's a really interesting place to enhance your returns, because overall, we continue to believe that the stock market's going to have a lot of headwinds. So that easy gains that came in 2017, where you could just buy and hold and all your funds and investments go higher, we're now going to see a lot that the markets are going to kind of hit a roof above their head. And so if you can collect and harvest premium through option writing, it's a great way to enhance your returns. But particularly as well, I think it's an interesting thing on a lot of the beaten down high dividend paying names, because what we've had is a condition right now where interest rates have been going higher and the inflation boogeyman's been out, and essentially all those stocks that are labeled bond proxies, interest rate sensitive because of their big dividends, have all been being beaten down. And in that period, when we have a situation where inflation is not going to come in nearly as high as everyone expects, suddenly all of these become very attractive, and you're buying them nice and low, and with the high volatility conditions, you can actually get some really nice premiums on those types of investments.
And obviously in this low interest rate environment, low yield environment, enhancing your yield, because it can be significant. I mean, depending on the yield you've got, but it's I think quite straightforward to make an extra 5 or 10% over the course of a year, doing the correct option strategy.
No, absolutely. And I mean, the key part there is that when you are an option writer, you have to be willing to, of course, be willing to sell the underlying stock. What makes it really neat is that for many Canadians, because they can do this in their RSPs and registered accounts, there's no tax implication to being assigned on your stock, and you can always buy it back on a dip. And so you don't have the tax consequences of enhancing that income, right?
Well, that's what you're going to be. I mean, we only got a couple minutes left, but if you want to enhance this, but you're hosting the seminar coming up right after the show. How to protect yourself, and maybe make some money during this kind of market volatility. Are those? What else are you dealing with, or have we hit the main subjects that you're going to be dealing with?
Well, absolutely. I mean, protecting oneself with puts is certainly one of the very interesting things to do. It's just basically not necessarily the best time to do it in the midst of one of these crashes. But one of the strategies which I think is very valuable for people to learn is the idea of collaring, which is a combination of the two very strategies we talked about, which is that you buy crisis insurance on your stocks and portfolio, but rather than taking it all out of pocket, you're using your covered call writing to help finance buying that insurance. And so it ends up costing you far less in doing it, and then you can sleep at night knowing that you don't have an undefined risk to the downside of your investment portfolio.
This is one of those subjects that, people who are not familiar with it can just sort of give up way too early. And I've said this for years. Understanding how options can enhance your profits or protect you on the downside, that kind of thing, I think is essential in these kind of environments. I mean, look at the risk or the volatility at the very least that we're experiencing here. You need every tool in the toolbox to help you out and help you profit and succeed in this kind of environment. And that's why I'm so keen on people coming to understand. That's why I'm glad you're hosting the webinar, why we gave you a call when we found out you were doing it. Because I think just start your process here. Start the educational process with doing it. And who better? Patrick Ceresna is the chief derivative market strategist, for big picture trading, does this nonstop. So just go to moneytalks.net and you can sign on at that moment. But take advantage of it is my big thing. Patrick, are you all set to do the lightning round?
Go ahead, shoot.
Okay, here we go. Time for the lightning round. 10 questions with Patrick. Here we go. Favorite movie?
Fight Club.
Best concert you've been to?
Pink Floyd.
First stock win you ever had? You could say option win in your case.
No, actually, short selling Bre-X was my first win.
Oh, you're kidding me. Man, that was a winner. Did you think it was always going to be that easy? There you go.
No, I did not.
Favorite historical leader?
The pompous Winston Churchill.
Best piece of financial advice that you ever got or maybe you've ever given?
Sell your losers.
Favorite sport?
Hockey.
Favorite team?
I'm scared to say it, but the Leafs.
Oh, you are scared. Well, that'll be all from Patrick today. Good night. Thanks for joining us. No, okay, you're allowed to say that. Best investment book you've ever read?
Reminiscences of a Stock Operator.
Jesse Livermore. Great book. Let's say I turned on your iPod right now or some such music device. What song would be on?
Too Late to Say Goodbye by Cage the Elephant.
There you go. And favorite financial show on radio? That better be easy, at least when you're talking to me.
Money Talks with Michael Campbell.
There you go. You think that's a setup, everybody? Yeah, I think I force people to say that. In fact, I'm number 11 on that list. But what the heck, we're going with this. Patrick, thanks for taking the time. And let me just finish with, you just mentioned selling your losers, protecting yourself, risk averse, all of that kind of stuff. Well, that's what you'll be discussing right after the show here on the webinar. So how long will that go, by the way, the webinar?
It's just going to be an hour.
Okay. And a great chance to get introduced to many of these things. But unfortunately, as I say, the technology allows only 500 people to participate. And go ahead and go to moneytalks.net, moneytalks.net. You can click on right there for the opportunity and sign on and be part of the webinar. It's going to start immediately after Money Talks here. And as I say, come on, look at the weather outside. Like Kamloops, really? You want to go out there? Edmonton, you want to go outside and play? in Vancouver. You certainly aren't. Victoria, you're not. So great chance to do this. And as I say, I think it's a process. Commit to learning about these things. Commit to learning about options, learning about, the strategies, and just get introduced to them. And that's why I'm such a big believer in this. Patrick, thanks so much for finding time for us.
Thank you, Michael.
Patrick Ceresna, Chief Derivative Market Strategist for BigTrading.com.